Back to news out of Spain, and we're joined from Wellington by Oliver Hartwich, who's the Executive Director of the New Zealand Initiative think tank. Oliver Hartwich, good morning to you. Now, before we look at the details of the bailout, remind our viewers just why Spain needed this financial help in the first place.
Well, Spain joined the Eurozone, and for the first few years everything looked fine for Spain. They enjoyed the low interest rates, but unfortunately the low interest rates that Spain got once they were in the Eurozone were used to finance a massive property bubble, massive property speculation. And that's actually what's happened. They built up this enormous bubble, the bubble burst, and now Spanish banks are in big calamities. And that's why the Spanish government now needs a bailout from Europe to help their banks, because the banks can't actually, they're sitting in a lot of toxic debt, really, that they can't recover. And that's why the whole Spanish banking sector looks very fragile now.
Yeah, well, the whole sector is on the verge of collapse based on the experience with those dodgy home loans.
That's exactly how it looks, and I mean, they are currently talking about 100 billion euros as a first bailout. I don't think it will end there. It's quite likely that we are going to see more of that in the future, and there are some experts who predict that in the end we're talking perhaps about 250 billion euros that have to be mobilized in order just to stabilize the Spanish banking sector.
Is there enough financial firepower within the EU to manage that sort of bailout?
It's getting very tight, actually, because the original European Financial Stability Facility and now the European Stability Mechanism, even combined, their firepower is not enough. And apart from that, the problem is actually that both these financial institutions actually have to raise the capital in the markets first. But who is still going to lend to the EFSF or to the ESM in the future if it looks that shaky? The Chinese have already indicated that their sovereign wealth fund is unlikely to be further engaged in the European rescue operations. And so for the European Rescue Fund, it actually becomes more and more difficult actually to mobilize that capital in order to help its members.
But really, EU officials have no choice. I mean, Greece is one country, but if Spain was to topple, it's effectively game over, isn't it, for the Eurozone?
Exactly. Greece you could always ignore. The Greek economy is about 2% of the total Eurozone economy, so even if Greece disappeared tomorrow, nobody would really notice. The problem with Greece was always, of course, contagion, that the Greek virus would spread to other countries, but we have now reached that stage, and the virus is now active in Spain. But once Spain falls, and it probably triggers further problems in France or in Italy, I think it's game over for Europe, and they won't be able to manage that anymore.
You're still pessimistic, as you have been for some time, about the future of the Eurozone?
Yes, I am, and not just because of the recent bailout mechanism, but also because of figures that we get out of European central banks. Just last week, we got new figures out of the Bundesbank, for example, that their exposure to European Target 2 debt, that is a transfer mechanism within the European Central Bank, is now 700 billion euros. And the Germans are unlikely to see that money back again if anything goes wrong in the Eurozone. So if a Greek departure happens or a Spanish departure happens, the German government will probably have to recapitalize its own central bank, because otherwise the German financial sector is also bankrupt.
And you mentioned Greece, and before we go, Oliver Hartwich, those elections are held this coming weekend with the anti-austerity drive politicians expected to get up, which could see the bailout deal scrapped with the EU. What are the consequences of that?
Well, it is quite difficult actually to see how the Greek elections will play out. But after the Spanish bailout, of course, the radical left in Greece has a new argument, because the Spanish actually managed to negotiate very good terms for themselves. They now get 100 billion euros from Brussels without having to commit to further austerity measures. And for the Greek opposition, they can now claim, well, look at Spain. They don't have to do anything. We should really renegotiate everything we have previously negotiated with Brussels. So I think this will actually help the Greek left now to win the next election.
Oliver Hartwich in Wellington, thank you very much for your time this morning.
Thank you.